Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another Loan Pro video quick tip. How are Florida transfer taxes and intangible tax calculated when purchasing a home? When buying a home, it is critical to understand what out-of-pocket costs may be due at closing. And because the state of Florida can assess certain taxes on both the transfer of real property and mortgages, today's video will help explain and better understand how these costs are calculated. And remember, if you need help or have a question, that is what we're here for. So just call or email to discuss your scenario, because we are known for returning calls, replying to emails, and responding to your messages. Now, wouldn't it be nice if everyone did that? As a starting point, let's review what the documentary stamp tax is per the Florida Department of Revenue. Documentary stamp tax is an excise tax imposed on certain documents executed, delivered, or recorded in Florida. The most common examples are documents that transfer an interest in Florida real property, such as deeds, and written obligations to pay money, such as promissory notes and mortgages. Tax is paid to the clerk of court when the document is recorded. When a taxable document is not recorded, the tax must be paid directly to the Florida Department of Revenue. Deeds and other documents that transfer an interest in Florida real property are subject to documentary stamp tax. So, what are the calculations? Documentary stamp tax on the deed transferring real property would be calculated by taking 70 cents for each $100 or fractional part. Please note that the tax rate of 70 cents is applicable in all counties except Miami-Dade. Additionally, a promissory note is a document which details the amount owed, interest rate, and the terms of your promise to repay. Also, as referenced under Florida statute, the state will assess the tax of 35 cents per 100 of the face value of any promissory note. Unfortunately, we're not done yet, because there is also a one-time, non-recurring tax commonly referred to as intangible tax, which is calculated at 2 mils per each dollar amount of the note secured by the mortgage. Now, it's easy to get lost in all the terminology, so let's just review a quick example to help better understand. Brenda as the buyer and Steve as the seller have agreed to the purchase and sale of a property located in Highlands County for a $125,000 sales price. After Steve's down payment of $25,000, he obtained a promissory note for $100,000 secured by a mortgage. Here, because the sales price is $125,000, the Florida documentary stamp tax calculation on the deed would be as follows. Further, because there is also a promissory note which was secured by a mortgage in the amount of $100,000, this would be calculated as well. Therefore, creating a potential tax charge of $1,425 on this transaction. While local customs may factor into who traditionally pays for certain charges, remember that the terms of the sales contract will usually determine who is responsible for each specific cost. And don't forget, we are known for keeping realtors and homebuyers updated through each step of the process, from pre-qualification to closing, along with one easy point of contact. Let's make it a great day, and I look forward to seeing you right here for the next Tip of the Week.